Welcome back to the channel. In today's update, we're taking a calm, data-driven look at the latest developments surrounding the Iraqi dinar and the broader economic landscape in Iraq. As we navigate through the middle of 2026, the financial picture is being shaped by a complex interplay of geopolitical tension, oil market dynamics, and significant domestic policy initiatives. For those following the Iraqi dinar, or IQD, the past several weeks have presented a mixed bag of signals, and we're here to break down what the numbers and official statements are actually telling us, without the hype or speculation. This video is for informational and educational purposes only. It is not financial advice. Let's begin with the most immediate question on many investors' and observers' minds. What is the current exchange rate for the Iraqi dinar against the US dollar? As of the most recent trading data, the USD to IQD exchange rate is hovering around the 1,310 to 1,311 mark. Trading Economics reported that the rate rose to 1,311.1800 on July 3, 2026, representing a very modest 0.09% increase from the previous session. Over the past month, and even over the last 12 months, the dinar has shown a slight weakening trend, also around 0.09%. This indicates a period of relative stability, albeit with a subtle, gradual drift. Some sources, like WISE, indicate a mid-market rate of around 1,310.00 IQD to $1 US as of mid-July. This official rate, anchored at 1,300 dinars per dollar in the federal budget, serves as the baseline for government transactions, but the market rate tends to trade slightly higher. The spread between the official CBI rate and the market rate is a persistent feature of the Iraqi financial system. The Central Bank of Iraq, or CBI, has been exceptionally clear on its official stance regarding the exchange rate. In a formal correspondence to the Ministry of Finance concerning the 2026 draft budget, the CBI stated unequivocally that the official exchange rate to be applied in 2026 stands at 1,300 dinars per dollar, a rate that has been in effect since February 2023. This is a crucial point of reference. The CBI's policy appears to be one of steadfast commitment to this peg, and they have been proactive in defending it. There have been persistent rumors in the market, some of which suggested an imminent devaluation to as high as 1,600 dinars per dollar, or a move to 142,000 IQD per $100. However, the CBI has moved aggressively to quash these rumors, categorically denying any planned adjustment and even warning against a disinformation campaign involving forged official letters. The CBI's message is clear. The official rate is fixed and secure. However, as we've seen in recent weeks, the market reality in the parallel currency exchanges often tells a different story. The disconnect between the official rate and the parallel market rate is a key theme. While the CBI maintains a rate of 1,300 dinars per dollar, reports from currency bazaars in Erbil and Baghdad have shown the dollar climbing sharply. According to a report from Kurdistan 24, the exchange rate moved from approximately 154,000 IQD per $100 to as high as 156,000 IQD in a short period, driven by a combination of genuine dollar scarcity and rampant speculation. This rapid depreciation in the parallel market is a direct reflection of underlying economic stress. A senior economic advisor to the Prime Minister, Mazar Mohammad Saleh, has attempted to calm these markets, stating that the Iraqi government has no plans to devalue the dinar and that reports of an impending hike are baseless. He emphasized that the administration is pursuing alternative economic mechanisms to navigate the current fiscal challenges. But as the report notes, in a highly dollarized economy, rumors of a pending rate change often become self-fulfilling prophecies, as traders hoard dollars in anticipation of further depreciation, which in turn drives prices higher. To understand why these pressures exist, we must look at the macro picture, and that picture is dominated by oil. Iraq's economy is, and has long been, overwhelmingly dependent on its hydrocarbon sector. Oil contributes about 60% of Iraq's GDP, a staggering 90% of government revenue, and 95% of merchandise export receipts. This extreme reliance means that any disruption to oil production or exports has an outsized impact on the country's fiscal health. And 2026 has been a year of significant disruption. The ongoing conflict in the Middle East has severely impacted Iraq's ability to export its crude. The closure of the Strait of Hormuz, the maritime choke point through which a vast majority of Iraq's oil once flowed, has been a primary culprit. In March 2026, following the closure of Hormuz, exports collapsed to just 600,000 barrels per day. The impact of this on production is stark. Rating agency S&P Global, in its June 2026 research update, projected that Iraq's full-year oil output for 2026 would average only 2.9 million barrels per day, a significant 28% decrease from the pre-war average of 4.0 million barrels per day recorded in 2025. This production level is far below the country's capacity and its OPEC plus quota. In fact, recent OPEC Plus data shows that in June 2026, Iraq was a massive 2.382 million barrels per day short of its production target. While Iraq did increase output month-on-month by 446,000 barrels per day in June, it still remains substantially behind its permitted quota. This sharp underperformance is directly attributed to the regional conflict. The economic consequences of this production drop are severe. S&P Global forecasts that Iraq's GDP will contract by a significant 15% in real terms in 2026. The IMF's April 2026 World Economic Outlook projected a similarly grim figure, with a minus 6.8% real GDP growth, driven by OPEC plus production quotas and the conflict. The government's budget deficit is expected to balloon, with some projections suggesting it could more than double from 4.2% of GDP to 9.2% by 2026. Oil revenues, which account for over 90% of state income, are expected to tumble dramatically from $99.2 billion in 2024 to an estimated $79.2 billion in 2026. This is the fiscal reality that is driving the anxiety in the currency markets and putting immense pressure on the CBI to manage dollar liquidity. Despite these profound challenges, there are some countervailing forces and potential glimmers of hope on the horizon. One of the most significant is the expectation that oil production could rebound in the second half of the year. S&P Global expects higher average oil prices through 2026 to be supportive of fiscal receipts, assuming oil exports gradually recover in the second half. This recovery is contingent on a de-escalation of the regional conflict and a lasting reopening of the Strait of Hormuz. There are also positive signs from within the OPEC Plus framework. In early July, OPEC Plus approved a further oil output hike of 188,000 barrels per day, with Iraq's portion of that increase set at 26,000 barrels per day. This is part of a broader effort to increase production and capitalize on any improvement in export routes. Furthermore, the potential resumption of exports via the northern Iraq Kirkuk-Ceyhan pipeline is another factor that could partially offset softer oil prices. If these developments materialize, they could provide a much-needed boost to government revenues and ease some of the pressure on the currency. On the fiscal front, the Iraqi government is navigating a highly complex and delayed budget process. The 2026 federal budget is being described as potentially the most complex in Iraq's modern history, shaped as a crisis management plan focused on protecting salaries and essential spending. The delay in passing the budget is directly tied to the protracted government formation process following the November elections. While a new government has yet to be fully formed, the country is currently operating under a monthly spending rule based on a previously adopted annual budget. A government advisor has noted that fiscal policy undoubtedly faces exceptional challenges in preparing the 2026 federal budget, given the rapid regional developments and the fluctuations in oil exports. The budget is not just a financial document, but a test of the Iraqi economy's ability to adapt to external shocks. The CBI has also played a crucial role, formalizing the official exchange rate of 1,300 dinars per dollar for the 2026 budget. Beyond the immediate fiscal and oil challenges, the Central Bank of Iraq is pursuing a long-term strategy of financial modernization and reform. These efforts are aimed at strengthening the banking sector, increasing financial inclusion, and ultimately supporting the stability of the dinar. One of the most significant announcements came in June 2026, when the CBI announced it had completed the procedures and requirements necessary for the reintegration of several banks that had previously been restricted from conducting foreign currency transactions in US dollars. This move is a key part of the CBI's broader efforts to strengthen monetary and financial stability, modernize the banking sector, and deepen its integration into the global financial system. By allowing these banks to return to dollar transactions, the CBI aims to enhance their ability to serve customers and support correspondent banking relationships with international financial institutions. This is a significant step towards restoring confidence in Iraq's banking sector and improving its international standing. The CBI is also actively pushing for a transition away from a cash-based economy. It had previously announced that by mid-2026, all cash transactions in government institutions would come to an end as the country transitions to a fully electronic payment system. In line with this, the CBI has completed technical preparations to increase spending limits on electronic payment cards, a move expected to expand digital financial services and promote financial inclusion. These reforms are critical for modernizing the economy, improving transparency, and reducing the informal cash economy, which often fuels parallel market speculation. The CBI reaffirmed its commitment to meeting the demand for US dollars, stating it would continue to provide foreign currency in accordance with approved regulations, ensuring the smooth processing of transfers and the fulfillment of legitimate public and private sector needs. They stress that these efforts are supported by strong foreign currency reserves, which remain sizable at just under $100 billion, and effective monetary policy tools. The country's sovereign credit rating also provides a useful barometer of international sentiment. In June 2026, S&P Global Ratings affirmed Iraq's long-term sovereign credit rating at B- and its short-term rating at B, removing the long-term ratings from CreditWatch Negative, but assigning a negative outlook. The rating agency's decision reflects expectations that Iraq's international reserves will continue to exceed its external public sector debt, which helps mitigate significant risks. However, the negative outlook reflects the multiple risks stemming from the ongoing Middle East conflict, including more persistent disruptions to key export trade routes and the risk of physical infrastructure damage. S&P could lower the ratings if the conflict escalates significantly or if disruptions to oil exports prove more sustained. Conversely, an upgrade could follow if institutional reforms and a more stable security environment strengthen growth prospects. The rating agency forecasts average annual GDP growth of about 2% over 2026 to 2029, following an estimated contraction in 2025. For those tracking the Iraqi dinar, the current landscape is one of profound contradiction. On one hand, there is the official, steadfast policy of the CBI to maintain the exchange rate at 1,300 dinars per dollar, backed by significant foreign reserves and a commitment to reform. On the other hand, there is the harsh reality of the parallel market, where dollar scarcity and speculation are driving the currency lower. The outcome of these two forces will depend largely on the trajectory of the regional conflict and the subsequent recovery of Iraq's oil sector. The potential for a production rebound in the second half of the year is a key variable. If the Strait of Hormuz reopens and the Kirkuk-Ceyhan pipeline resumes exports, we could see a significant improvement in government revenues, which would alleviate pressure on the currency and strengthen the CBI's hand. However, if the conflict persists or escalates, the pressures on the dinar are likely to continue. Looking at the broader structural picture, the banking reforms being implemented by the CBI are a positive long-term development. The reintegration of previously restricted banks into the dollar system is a crucial step towards normalizing Iraq's financial relationship with the rest of the world. The push for a cashless society and the expansion of electronic payments are also essential for building a more modern, transparent, and stable financial system. These reforms, while not having an immediate impact on the exchange rate, are foundational for the long-term health of the Iraqi economy and, by extension, the dinar. However, these positive structural changes are currently being overshadowed by the acute fiscal crisis caused by the drop in oil revenues. The government's ability to navigate this crisis, manage its spending, and pass a coherent budget will be critical. It's also important for observers to understand the psychological and speculative dynamics at play in the Iraqi currency market. The reports from the Herbal Bazaar highlight how rumors and fear can drive market movements, often independently of the underlying economic fundamentals. The CBI's strong denials of devaluation rumors are an attempt to manage this psychology, but the impact of such rumors can be persistent. In a dollarized economy, the confidence of traders and citizens in the local currency is paramount. The CBI's actions to combat disinformation and reaffirm the peg are part of a broader effort to maintain that confidence. However, the persistent gap between the official and parallel rates suggests that the market is not fully convinced. This gap is a measure of the perceived risk and uncertainty in the Iraqi economy. For investors and individuals holding Iraqi dinar, the current situation warrants a cautious and well-informed approach. The currency is facing significant headwinds from the external environment, but the CBI is taking active measures to defend its value and modernize the financial system. The path forward for the dinar is inextricably linked to the geopolitical situation in the Middle East and the subsequent recovery of Iraq's oil exports. While there is potential for a rebound if conditions improve, the risks remain substantial. This video is for informational and educational purposes only. It is not financial advice. Any decision to buy, sell, or hold Iraqi dinar should be made after careful consideration of your own financial situation and risk tolerance, and ideally in consultation with a qualified financial advisor. As we look ahead, the key indicators to watch will be the monthly oil production and export figures, any updates on the reopening of the Strait of Hormuz or the Kirkuk-Ceyhan pipeline, and the progress of the 2026 federal budget. The CBI's actions on the ground, particularly in managing dollar liquidity and continuing its banking reforms, will also be crucial. The situation is fluid, and new information is constantly emerging. For those who want to stay informed, it's essential to rely on official sources like the Central Bank of Iraq and the Iraqi News Agency, as well as reputable international financial news outlets and rating agencies. The market for the Iraqi dinar is complex and often driven by forces beyond simple economic models. It's a market where geopolitics, psychology, and policy all converge. Staying informed and analytical is the best defense against the noise and speculation that can often dominate the conversation. We hope this update has provided you with a comprehensive and balanced overview of the current state of the Iraqi dinar and the Iraqi economy. We will continue to monitor these developments closely and provide you with updates as new information becomes available. If you found this analysis helpful, please consider subscribing to the channel for more in-depth financial news and analysis. Thank you for joining us.